No, first, I think we have to be pleased with how well the markets have roughly reacted to a substantial shift and direction change from the Fed. And so we also believe that 3 is what the Fed is targeting. But as we saw even over the past month, they've moved fairly quickly, and we think they will continue to react specifically to both labor markets and to the inflation numbers. Those are the 2 key figures. But I think the markets have been pleased with what they've done to date. And I think the next target will also be the runoff debate. What will they start doing in terms of running off the Fed's balance sheet? And those are the things we're going to be watching as we think about what the Fed does into 2022. But a good first move, as the markets seem to be relatively sanguine with their anticipation of what the Fed needed to do for the next year.
Yeah, there's some talk that the Fed might prioritize the runoff over actually tightening policy, lifting rates. Where do you stand on that front?
Hard to project. I think lifting rates can't be done until they finish their buybacks. And I think that will be the kind of decision they themselves will be debating as we go into a year. And hard to project that because the Fed themselves has said very difficult to judge what's going on in these labor markets. These are, is it structural? Is it transitory? We don't have history on which to look at these changes in the labor markets. And so hard to make a prognostication on that. I think the rate hike probably signals more to the markets than does a runoff.
When do you see the first liftoff if we do see a rate hike? Is it coming at the end of the first quarter, the start of the second quarter? At the start of the second quarter?
Again, hard to prognosticate since we've even seen the Fed itself moving quickly in 1 month from their change in direction. It's got to be done after the buyback, and so that is targeted for March, and so that would mean more likely in the second quarter than the first quarter.